Hello everyone, and welcome back to Weekly Stock Market Recap, your go-to source for the week's biggest moves in equities, macro, and trade. In this episode, we cover October 6th through October 10th, 2025, a week that ended with a dramatic turnaround and warnings of renewed trade tensions. Let's jump in. The week started on a strong note. On Monday, October 6th, the S&P 500 rose 0.4% to 6,640.28, and the Nasdaq jumped 0.7% to 22,941.67, both hitting new closing highs. The Dow drifted slightly lower, down 0.1% to 46,694.97. Much of the early week strength was fueled by the announcement that AMD struck a major AI chip partnership with OpenAI. This deal sparked strong buying in chip and AI infrastructure stocks. Meanwhile, macro headwinds lingered. The U.S. government remained partially shut down, delaying key data, and markets were cautious about valuations and potential policy risks. However, by Friday, October 10th, sharp trade war escalation fears ignited a broad sell-off. The S&P 500 plunged 2.7%, the Nasdaq dropped to 3.6%, and the Dow fell 1.9%, losing 878 points. For the full week, all major indexes recorded losses. S&P 500 down 2.4%. Nasdaq down 2.5%. Dow Jones down 2.7%. Russell 2000 down 3.3%. Even with the drop, all indices remained positive year to date, with the Nasdaq leading, approx plunged 15%, the S&P 500 4%, the Russell seized to 7.4%, the Dow to 6.9%. The main catalyst for Friday's crash was renewed tariff threats. Former President Trump announced the possibility of 100% tariffs on Chinese imports, effective November 1st, coupled with export controls on U.S. software. These threats followed China's tightening of export controls on rare earth minerals, vital to technology, defense, and clean energy supply chains. Markets interpreted this as a clear escalation of U.S.-China friction. Worries about retaliation, supply chain disruptions, and geopolitical fallout triggered a broad sell-off. Tech and semiconductor names were especially vulnerable. Nvidia, Amazon, AMD, Tesla all dropped more than 2% on the Friday slide. The Philadelphia Semiconductor Index plunged 6.3%. Additional pressure came from Chinese actions, antitrust probes, e.g. Qualcomm, concerns around chip supply chains, and the possibility of retaliatory measure. The abruptness of the announcement, with little prior warning, rattled investor confidence and reignited volatility. Earlier in the week, the AMD OpenAI deal had driven enthusiasm for AI infrastructure names. AMD soared 24% on the news. That optimism kept the tone largely bullish, especially among growth and tech sectors. However, valuations were already stretched, and many analysts warned the rally had priced in perfection. The sharp reversal on Friday exposed fragility. When policy shocks hit, high-beta tech names were among the first to give back gains. The U.S. government shutdown delayed key economic releases, such as September non-farm payrolls, which left markets flying partially blind. The Fed's next moves became more uncertain. Without fresh data, decisions on rate cuts or policy pivots would depend more heavily on forward guidance and earnings. In short, investors faced a cocktail of geopolitical risk, valuation stress, and data scarcity. Perfect conditions for a volatility spike. Near-term market risks. Volatility likely stays elevated, especially in tech, semiconductors, and China-exposed names. Pullbacks and sector rotation may accelerate. Defensive names, quality stocks, or yield plays could outperform for a stretch. Supply chain stress in tech hardware, rare earths, and semiconductors could ripple across global manufacturing. Retaliatory trade response from China or escalation into a broader trade war remains a clear risk. The possibility of a policy misstep, either too hawkish or too dovish, by central banks is higher due to uncertainty. Possible opportunities. Dip buying in high-quality growth names, if earnings hold up, might appeal to patient investors. Safe haven plays. Sovereign bonds, gold, or select dividend names may see inflows. Selective exposure to AI infrastructure, if valuations reset sensibly, could offer upside. Hedging with options or volatility instruments might be attractive in this regime. Tuesday, Wednesday. Market pulled back slightly as investors digested profit-taking and moderating breadth. Thursday, markets flirted with fresh highs again, but positioning risk was rising. Friday, the tariff shock hit, selling across sectors accelerated, and volume spiked. The VIX, Volatility Index, jumped significantly. 1. Policy risk is not in the rearview mirror. Trade war uncertainty remains a dominant overhang. 2. Valuations matter. Even the best narratives can't shield stocks when macro risks re-emerge. 3. Stay nimble. Markets may whipsaw, so tactical risk management is essential. 4. Focus on fundamentals. Earnings, cash flow, and balance sheet strength will win in volatile times. 5. Use volatility to your benefit. Hedges, diversification, and patience may offer protection. That wraps up this week's market recap. If you found this helpful, please hit like, subscribe, and ring the notification bell. We'll be back next week with the OCT 1317 recap. Thanks for watching, trade smart, and stay cautious out there.